Hello, my name is Lisa Byrne, and I'm a certified divorce financial analyst. So my part of the presentation is about the financial implications of divorce and how to prepare yourself. I call my process Control, Confidence, and Closure. We'll start with a simple to-do list. What I find is that clients that are beginning this process feel like their life is out of control. So some of the very simple things that I'll do will start to give you feeling of control around the process. First thing that I'll have you do is to get a credit report. There is a free service called creditkarma.com, and it will give you your credit score, and then you can look through what outstanding debts and what your credit looks like. And the reason that you want to do that is it's an integral part of the divorce process is if you need a credit card in your own name, or if you are going to refinance your home, perhaps to pay a spouse's equity off in the house. So knowing your credit score is an important beginning place to start. Next is to have a credit card in your name only. Oftentimes couples will have joint accounts, and if you were not the primary on the account, you will want to open an account that is in your name only. You'll also want to go to a local credit union or a local bank. And I say that as opposed to one of the larger institutions. I prefer to see my clients go to some of the smaller credit unions and open a checking account in your name only. Divorce is a very cash-hungry business. And what I mean by that is one of the first things that if you are about to hire an attorney, the attorney will require a retainer from you. And retainers are going to cost you anywhere from $2,500 to $5,000 depending on the attorney. They will work on an hourly basis, and the retainer goes into their trust account. If you hire a financial professional, they will also charge you on an hourly basis or a flat fee. And your therapist may or may not be able to take insurance, and so that, of course, will cost you out of pocket if you or your children are seeing a counselor. So what are some of the most important things you need to know about your finances to prepare? And this is where I begin the process and tell clients that they begin to have some confidence in themselves and their knowledge and how to move forward. Number one is to have a team of experts on your side. Don't think that you can go at this alone. Now, many couples can do a lot of negotiating in advance, but it is important that you have a team of professionals that you trust and that will help guide you through the process. One of the reasons I would assume that you're listening to this program is you want some of the help and guidance and advice that we're about to give you. When you are about to hire a professional, here are some ideas, and some of the people that you may hire is, of course, you are going to want to hire an attorney that focuses primarily on family law. The family law arena is very different from an attorney that does criminal presentation or estate planning. So you do want somebody that focuses on family law. Your financial professionals could be a CDFA like myself, or it could be an accountant, a CFP, which is a certified financial planner, or an accountant that perhaps needs to do forensic accounting. So if you have a very complicated financial life, you may need more work than just a simple accountant can do. Other professionals would be the mental health professionals, mental health counselors. You'll want to look for somebody who has credentials as a licensed and marriage family therapist, who may be credentialed as a mediator or as a parenting consultant. It's also very important to prepare your financial documents. The more you're prepared in advance, the less expensive it's going to cost you, because remember, most of your professionals are going to be working on an hourly basis. So the first thing that an attorney will ask you to bring in is a budget and a cash flow, and that's a good place for you to start. One of the most important things is, of course, going to be your budget. The budget is going to be the basis for which you'll ask for support, spousal support, or child support. So preparing a complete and thorough budget is an extremely important part of what this process is. You'll also be asked to bring in your tax returns. So try to have access to your tax returns probably 2 to 5 years. If you own your own business or you're self-employed, you'll definitely need those couple of years of tax returns. You'll also want to put together your bank statements, start to go through your checking and savings accounts, and that will help you develop your cash flow, and it will tell you how much are you really spending on your monthly items. Credit card statements. Credit card statements, often we use our credit cards to buy groceries and we buy it for other household. You're going to look at what you're spending on car maintenance and things like that. So put together all of your credit cards, both for you and if you have access to your joint credit card statements, those as well. Retirement account statements, as much as you can gather. That's going to include 401ks at company-sponsored retirement accounts, IRAs, Roth IRAs, do you have a pension, anything that has to do with retirement assets. Also, you're going to want to look at premarital assets, and what that means is that if you came into the marriage with a retirement account, you're going to want to look for a statement that dates back before your date of marriage. That's going to be really important to document premarital assets. It is the burden on the person that is trying to claim premarital assets to provide that documentation. If you owned your home before you got married, you're going to want the closing statements, and you could go back to the title company and see if you can find some of your statements from those. So premarital asset statements are going to be an important part to make sure that you have the documentation on. The same thing with an inheritance. If perhaps one of your parents died before you were married, or even during the marriage, it is key to show who the check was made out to. If the check was made out to, say, Mr. and Mrs. Smith, then that's not then it's not a premarital asset. That'll be a marriage and a joint asset. However, if the check was made out to you specifically, and you can provide documentation of that, that is a good case for the inheritance being a premarital asset. Life insurance will either be term or whole life. Whole life will have a cash value, so you want that documented as well. Annuities are another thing that sometimes people forget to look. So perhaps you had an annuity from a previous employer, or it's an older document. You'll want the most recent annuity statement, recent statements on your home mortgage. When I ask people for what their mortgage payment is, oftentimes they'll just give me an amount. That doesn't tell me a lot, because your mortgage payment will include principal, interest, taxes, and insurance. I need all of those broken down. I want to know what your principal balance is, what it started out as, so when you did the original date of the loan. I need to know what your taxes are, and I need to know what you're paying for insurance. Second home, or same thing with second homes, but also on second lines of credit or home equity lines of credit. Taxes. I want to know an approximate value on the home, and so a tax bill can be a basis for what we'll look at. However, with the increase in real estate prices in the last couple of years, your tax statement oftentimes is not a good indication of what the value is. And so if you've refinanced, which many of us have in the last couple of years, see if you can find that appraisal, because that'll be a better idea of what the value on the home is. And then, of course, any other important financial documents that you can think of. Also, review your debt. We're going to want to know, outside of credit card debt, I'm going to want to know car payments. And again, not just what the payment is. I want to know what the loan amount is and what your interest rate is. And student loan debt. This is kind of an important one. Student loan debt goes with the person. Being in theory, your education, of course, stays with you. So if you came into the marriage with student loan debt, you're probably going to come out of the marriage with student loan debt. Very seldom is that debt split between a couple. Now let's talk a little bit more about the budget. That seems to cause a lot of anxiety for clients. When you're putting your personal budget together, you're going to separate out your children's budgets, because the children's activities and budget is separate from your personal budget. One of the first questions I'm going to ask is, do you want to stay in the home? And I will ask you, can you afford it? Do you want to stay in the home? One of the things I try to have clients think about very carefully is don't mix money and emotions. Most of us have a personal attachment to our homes, but oftentimes we can't afford to stay in it once the marriage is split up. And so that's a very difficult conversation that we'll have. And you have to make sure that it's within your budget to keep it. When I say that mixing that money and emotion, is it a smart decision? Can you afford it? Does the house need repairs? Is it going to need a new roof? Do you have the assets that if you need a new roof or your heating and air conditioning unit goes, do you have the assets that you could then have it repaired? Because the equity in a home can decline very quickly if you don't have the ability to do maintenance and keep the home up. And also just the thought of equity in a home, and can you afford to see a downturn in what that equity is? If you don't have the ability to keep it up, then the value of the home would begin to decline. Budgets are going to include your monthly expenses. When you do a download on our presentation sheets, I also have a budget sheet that is included, so it'll be a good place for you to start working on it. Health insurance is a very important topic and unfortunately a very confusing topic. If you are on your spouse's health insurance right now, you will not be able to stay. You will be able to get COBRA for a short period of time, but with very, very few exceptions, a divorced spouse cannot stay on the health insurance that they were previously on. Now your children can, but you'll need to go to the health insurance exchanges and get an idea for what the cost is. If you have a pre-existing condition or you have some health issues, then it's really important that this become very thoroughly researched on your part so that it is an accurate accounting in your budget. Once you know that your budget is accurate, it's going to be able to give you a good idea of expectations for if you have a spousal alimony case. Alimony and spousal support, which are one and the same, is not meant to punish the other party, but it's meant to provide the spouse from a long-term marriage with the income to pay your bills and live a comparable or somewhat comparable lifestyle. And so again, it's not meant to punish, and nobody's ever going to get 100% of the other person's income. So you have to have a very realistic expectation of spousal support. It's also very discretionary and oftentimes is up to a judge, and it is different from county to county. And so when I refer back originally in saying it's important to hire a family law attorney, family law attorneys know the judges in different counties, and so it's pretty important that they know they worked in the county that you live in, and they know the county that you're going to be filing in. So that's kind of an important piece. Also, spousal maintenance and alimony is taxable to the recipient in almost all cases. Sometimes, again, there's exceptions to the rules, but you'll need to be able to prepare and budget for quarterly tax payments. Child support is not taxable, but spousal support and maintenance is taxable to the recipient. It is a tax deduction for the person paying. So if you are the person who will be paying child support, it does come off of your income. So it is a tax deduction for you. Child support also depends on custody time. So that'll be part of your parenting and custody time that you'll discuss with your attorney. It is a little bit easier to determine than spousal maintenance. Almost every state has a calculator for determining child support. Let's prepare your child's budget and think very carefully through that. Extracurricular activities. Most parents that I meet and talk with, their kids are in a million activities. You need to make sure that you outline those fairly carefully and have an agreement with your spouse as to what will be paid for. If they're over 16, do they have a car? Whose insurance is going to the car stay on? How much are they spending in gas, transportation, maintenance on the car? Educational costs. Do they go to a private school? Are they going to be able to continue going to the private school once the divorce is final? Can you afford that? And so make sure that, again, you have that writing an agreement. clothing, grooming, healthcare for the children. An important part of it, braces. Are the children going to need orthodontic care? So again, trying to have many of those things agreed upon can lessen anxiety and lessen kind of arguments and fights in the future. It's also important to know that a parent is not required to pay for college education. And so having an agreement with your spouse in advance as to who is going to pay for college is going to be an important issue to discuss. Also, the last thing on children and child support is child support does end at 18 or at 19 if the child is still in high school. Now let's talk about taking an inventory. You're going to want to walk through the house and take an inventory of your personal items. If there are things that are really important to you, if they're inherited items, if there's family heirlooms, make sure that you try to get an inventory and do some sort of an assessment of value on them. But what I always tell clients is please don't fight over silly things. I always use the example of the couple that fights over the Waterford crystal that hasn't been out of the case in 10 years. Make sure that you're realistic about what you want from the house and try to make a good inventory list. Particularly important in that inventory list is that if you are going to move out of the house or your spouse is moving out, the other person will be setting up a new household. So if you have children, and the children's furniture is going to stay in the existing home, then the parent who is moving to an apartment or another home does get to put into their budget, and it will go on their asset side an estimate of what it's going to cost to set up a household. So if you're keeping the dishes and the glassware, then your spouse also will need to buy those household items. So that will go on your budget and asset lists. Car loans, again, we talked about that, kind of debts. Do that inventory of your cars, your toys. Toys meaning, do you have boats and do you have kayaks? Do you have bicycles? Those kind of things. Try to make as fair of an assessment and an inventory as possible. And then other things you're going to want to think about and important to discuss with your attorney and perhaps a financial expert is if one person moves out before the divorce is final, how is the household income going to be divided? If one person is the primary wage earner, are they going to continue to put money in the joint account? Try to have some sort of an agreement outside of the court system so that it doesn't cost you a lot of money on how household income will be divided, who pays for what during the divorce process. More things that you can agree upon makes it a little bit easier, makes the process smoother. Who's going to be responsible for debts? That's why I say get a credit card, and the credit card is in your name only, then those will be your debts and it'll be easy for you to identify. Parenting consultant. You may need to hire a parenting consultant to help you agree on parenting time. And then if you are older and perhaps have been in a 25 or 30 year marriage, want to know some of the details around Social Security and what you'd be eligible for from your spouse's Social Security. There's a lot of moving parts in a divorce. And the key to what this workshop is really about is to give you some financial guidance, give you some legal advice, and really give you the tools to help you understand the process and to start to make decisions that are going to be best for you and your family. There's lots of different ways to do this, and the decisions are going to be yours to make. The closure that I talked about in my process, the control, confidence, and closure. Closure is going to come to you in 3 different ways as well. It's going to be financial closure. It's going to be finalizing the actual divorce, developing a long-term financial plan. So not only what does your life look like now in splitting your assets, but what is your life going to look like in 5, 10, and 20 years down the road? So trying to develop a financial plan. Putting estate plan together. You're going to need new health care directive, new wills, changing beneficiaries on your retirement accounts. reviewing life insurance to make sure that your family is covered. Legal closure is going to be working with your attorney to finalize all the documents, moving your assets around properly, and making sure that everything is finalized. And then, of course, very important piece of it is the mental health closure, taking care of yourself through the process, making sure that you are in a place that you can move forward in your life. Thank you for letting us share this information. We hope it's helpful to you. And again, you can take a look at our website to join us in one of our workshops. Thank you.